Welcome. In this video, when will the Zbcn coin uptrend start? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When a bearish order block is positioned above the price, from a technical analysis perspective, it indicates a zone where sellers have previously stepped in strongly, where upward moves have been limited in the past, and which generally acts as a significant supply area. A bearish order block forms at points where the price previously showed upward movement, but faced heavy selling pressure in a certain region, and then dropped. In short, this area is where strong players previously opened selling positions, so when the price approaches it again in the future, it may face similar selling pressure. Therefore, the price breaking through this block level and being able to hold above it is a very critical indicator for the continuation of the upward movement. At this point, the presence of a bearish order block above the price appears to investors as a kind of obstacle or barrier. When the price reaches this area, although buyers want to keep the upward move going, resistance is usually encountered due to the seller's previous actions. As long as this resistance is not broken, it is difficult for the uptrend to gain strength. However, if the price breaks through this area with high volume, it shows that the influence of sellers in the market has weakened and that buyers have taken control. Here, it's not just about the break itself. What matters is that the price can hold above this level after breaking it. If the price moves above this level only briefly and then quickly pulls back, this situation is usually considered a false breakout. But if the price moves above this level and manages to stay there, the bearish order block loses its function, and this area can later turn into a support level. Breaking a bearish order block also means that the market has crossed a psychological boundary. Many investors who see the price reaching this zone may act with the expectation that selling pressure will return from here. If buyers manage to push through this area anyway, a new sense of confidence develops in the market. This confidence excites both technical traders and larger investors, strengthening expectations for the continuation of the upward trend. For this reason, breaking a bearish order block is generally considered a strong signal, confirming the direction of the trend. Additionally, because a bearish order block represents the points where the price was previously rejected, these are areas with high liquidity in the market. In other words, many orders accumulated here in the past, and the price was rejected from there. Therefore, when the price approaches this area again, investors who could not take positions earlier or were on the wrong side may re-enter the market. If the price breaks through this block with strong volume, most sellers will be forced out of the game, and the way will open for buyers. Some sellers may even reverse their positions to cover their losses by buying instead. This situation further accelerates the upward momentum of the price. In technical analysis, breaking a bearish order block is not only a short-term move, but can also signal medium and long-term trend reversals. Especially when a bearish order block formed on higher time frames is broken, this breakout is often interpreted as the beginning of longer-lasting upward movements. Because order blocks on higher time frames represent the actions of bigger players, breaking these levels indicates that the balance of the market has changed permanently. Also, for the price to be able to break this block, market dynamics generally need to become favorable. In other words, it's not just about technicals. Fundamental factors also need to support the buyers. For example, positive news, increasing demand, or overall bullish market sentiment can increase the likelihood of breaking through this block. In such a scenario, breaking a bearish order block is seen by investors as not only the removal of a technical obstacle, but also as a strong confirmation that the balance of power in the market has shifted toward buyers. Holding above the level after the breakout leads investors to start treating it as a new support. This changes the psychological structure of the market. The area that was once dominated by sellers now comes under the control of buyers. This both makes it easier for new buyers to enter the market and boosts the confidence of existing investors. As a result, the uptrend can continue with a stronger foundation. In summary, breaking a bearish order block above the price shows that selling pressure in the market has ended, buyers have taken control, and the likelihood of the uptrend continuing has increased. This is not just a technical level, but also a sign of an important shift in the psychological structure of the market. If the price breaks this level with strong volume and holds above it, this scenario is one of the most bullish outcomes. But we can't base an analysis on the order block alone. Let's take a look at the other metrics as well. Stay tuned.
In the ATR indicator, a rising line actually shows that market volatility, that is, price fluctuations, has started to increase. This rise is a very critical signal for investors because it indicates that the market is no longer in a calm, narrow-range movement, but has entered a phase of broader, sharper, and more directional swings. As ATR rises, price movements begin to occur within wider ranges, and the likelihood of stronger trends forming in a short period of time increases. This situation, especially when combined with an upward price movement, gives investors a strong signal that the price may move higher more quickly. This is because high volatility shows that more buyers are entering the market, trading volume is increasing, and the upward movement of the price is gaining supportive strength. During periods of low volatility, a financial instrument generally moves sideways or within limited price ranges, meaning investors cannot achieve large profits in that period. However, when ATR begins to rise, it indicates that the market has broken out of that stagnant structure and has gained new momentum. Investors in such times notice that buying opportunities appear stronger and deliver results more quickly. A rising ATR also indicates that uncertainties in the market have increased, and this often creates a dynamic that moves the price upward more rapidly. This is because most of the time, major price increases follow quiet, narrow-range periods. For this reason, an ATR rise can be considered not as a warning, but more as a positive signal indicating that the price is about to gain momentum. When the price is in an upward trend and ATR increases, it serves as a particularly strong confirmation mechanism. In this case, it indicates that the current trend is not just coincidental or temporary, but that there is significant buying power and market momentum behind it. In other words, it paints a reassuring picture for investors. For example, if the price has bounced upward from a support area and ATR has started to rise at the same time, this movement suggests that the price will continue more strongly and potentially break through new resistance levels with ease. In this context, high volatility expands the price's range of movement and helps the trend develop faster. When ATR rises, the number of new investors entering the market can increase. This is because many investors show little interest in the market during periods of stagnant prices, but when volatility rises, that is, when the ATR line starts moving upward, new opportunities begin to appear. This situation leads to a concentration of buyers, contributing to the price rising more rapidly. In other words, the rise in ATR is not only a technical indicator, but also a sign that investor psychology is starting to change. Stagnation gives way to excitement. The stagnant chart is replaced by rapid upward movements. Another important point is the mathematical logic behind why prices can rise faster when ATR is increasing. When volatility increases, candlestick lengths grow, meaning that prices cover much wider ranges in daily or hourly periods. These longer candlesticks allow prices to bounce more strongly from supports and break resistances more easily. For this reason, rising volatility multiplies the upward potential of the price. For example, an instrument that previously moved in $10 ranges might start moving in $30, $40 ranges after ATR rises. Naturally, this offers investors the chance for higher profits in a shorter period of time. When ATR rises, liquidity in the market also increases. More investors enter trades, volume rises, and this increase in volume supports the price being pushed upward more rapidly. The simultaneous rise of volume and volatility is generally seen at the start of very strong upward trends. For investors, this means that opportunities are both more plentiful and more reliable. Because in a low volatility environment, upward price movements are generally limited and short-lived, while in a high volatility environment, price increases can be long-lasting and strong. In addition, a rising ATR signals not a change in market direction, but an acceleration in directional movements. In other words, when ATR rises during an already upward trend, it sends the message that this trend will grow even stronger. That's why investors generally view an ATR rise as a positive confirmation factor, because the upward movement of the price is now being supported by stronger momentum, which gives investors confidence. This scenario is particularly valuable for trend-following investors because trend continuity and strength are critical for them. When volatility increases, the probability of the price breaking through psychological barriers also strengthens. For example, a resistance level that could not be broken for a long time.
A descending channel formation is one of the patterns that investors pay the most attention to in technical analysis, as it shows that the price is moving within a certain trend. In this formation, the price moves between two parallel lines, compressing with both lower lows and lower highs. The lower line of this channel acts as support, while the upper line serves as resistance. The midband is usually a critical indicator for understanding how the price oscillates within this channel and where balance tends to form. In the situation you mentioned, the price rising toward the midband actually indicates that the market has entered a certain recovery trend but still remains within the channel's boundaries. In other words, testing the midband at this point suggests that the price is moving healthily within the channel and that a preparatory phase may be taking place ahead of a strong breakout. A successful test of the midband reveals that the price could regain momentum, with a high probability that this momentum will continue up to the upper band. In technical analysis, midband movements often foreshadow the next step. If the price does not reject the midband, expectations for upward momentum become stronger. The price moving toward the midband is also important in terms of investor psychology, because many traders interpret a midband touch as a zone of indecision. At that point, the price must determine its direction. If the price breaks through the midband strongly, it gives traders confidence and leads to increased buying. This is why an upward move from the midband often starts a move that continues up to the upper band. In your scenario, the price reaching the midband and then turning upward indicates that a strong journey toward the upper band may be starting, and this journey could turn into a much more significant rally with a breakout of the channel. Such movements are the opportunities investors wait for, because a channel breakout often signals that the market is leaving its short-term trend and may be starting a new medium to long-term trend. The possibility of breaking the upper band becomes critical at this stage. Once the price touches the upper band, it usually either experiences a sharp rejection and pulls back toward the midband, or breaks the band with strong volume and steps into a new upward trend. If the price manages to achieve this breakout, we can confidently say that the descending channel has ended and the market has shifted direction upward. Such a breakout often draws increased attention from investors. This interest leads to a rise in trading volume, which is one of the most important factors supporting a breakout. In technical analysis, every breakout is expected to be confirmed by volume. If the price breaks the upper band while volume is also rising, the likelihood that the rally will be sustainable becomes even stronger. In addition, breaking the upper band of a descending channel creates a chain reaction in investor psychology. Because when a price is trapped within a channel for a long time, it creates a perception similar to a test of patience for investors. When this test ends, meaning when the price breaks the upper band, many traders see this as an opportunity. They interpret the breakout as the beginning of a new trend and move to buy. In this way, the price's rise is supported both technically and psychologically. So, as you described, if the price tests the midband, then begins an upward move toward the upper band, and then breaks the upper band, it can gain a much stronger upward momentum. These kinds of scenarios are actually common in descending channel structures. Especially after long periods of decline, these channels often turn into accumulation zones. Investors know that prices will stay compressed in these areas for a while and then choose a new direction. Testing the midband is a sign that this choice is approaching, because midband moves show that the channel is nearing its end and that the direction setting process has begun. If the price does not reject the midband and heads toward the upper band, it shows that buyers are still strong and are looking for opportunities. With the break of the upper band, these buyers inevitably gain even more confidence. For this reason, it makes perfect sense to evaluate such a channel movement positively. From a technical perspective, the price moving from the midband up toward the upper band is a momentum indicator. Momentum indicators are generally important in terms of trend continuity. If the price were consistently moving closer to the bottom of the channel, we could say that sellers were stronger. But if the price tests the midband and turns upward, it shows that sellers are losing strength while buyers are starting to dominate the market. A breakout of the upper band means that this dominance has been confirmed. In this way, the market exits the downward channel trend and enters an upward trend. Another important aspect is how investors use these kinds of moves. Most investors see descending channel breakouts as a trend reversal signal. So if the price tests the midband, moves toward the upper band, and a breakout occurs, it draws more new investors into the market. This in turn accelerates the price's rise. So this move is not only a graphical formation in technical analysis, but also a trigger for a chain reaction in investor behavior. Considering all these details, it is safe to say that the scenario you described paints a highly positive picture, because the price moving to the midband, gathering strength from there, rising to the upper band, and then breaking the upper band is evaluated in technical analysis as a strong bullish signal. Especially after long-lasting descending channel patterns, such a breakout often signals a lasting trend change. This is why an upward movement starting from the midband and continuing by breaking the upper band always creates a hopeful and opportunity-filled outlook for investors.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.